Welcome to a beginner's guide to gold, silver, platinum, and palladium. Hello folks, Drew Rathgeber here with ProGoldTrader.com. I am the owner and operator. A little bit about me is I came from the spot industry over 20 years ago based on my father's recommendation to get to the professional side. In 2006, I became a licensed commodity broker with the NFA and CFTC. In this beginner's guide, I'm going to show you effectively the different instruments. I'm going to show you basically the cost advantages and really the overall sophistication level of how you should be trading precious metals. So let's go ahead and get started. All right, so one of the main reasons I started ProGoldTrader.com is I really want to bring the gold bug trading community out of the 1960s, 1970s business model. And here's what happened. You can see there was 10,313 investors with losses in aggregate amount of $448 million, $715,546 in the spot market. This is due to outsized spread charges. So this is according to the LA Times and why I think every gold bug should learn and trade on the futures market. So effectively, this is according to the LA Times. The spot markets was generally about 3%. So that means according to the example cited in the complaint, it would cost a Monex customer in the spot market $2,550 to trade 5,000 ounces of silver versus $25 into a substantially similar futures contract on a regulated exchange. I always tell my customers, half the battle is market direction, but really a lot of the precious metals community should be really focused on what instruments they're using to invest and trade precious metals. So in the spot market, which is great for the buy and hold, the collector market, but from an investment perspective, it is about one of the worst investments you could possibly do. Now, you can do a combination of take-home and investment. So I'm not saying one versus the other. You can do both. But just understanding that a spot transaction, because of its lack of transparency and due to its large spread, these spot storage accounts particularly are not the most advantageous. ETFs. Well, I do have a problem with ETFs. They're not traded 24 hours a day. You're bounded by their market hours. So if gold, silver, platinum, and palladium have an adverse move in the after hours, you're locked out with those ETFs, which in my opinion adds substantial risks. In addition, they're paper-based instruments. They don't always track the underlying precious metals markets. Another big one, miners and junior miners. I see a lot of people looking for exposure. These are extremely volatile paper-based instruments. I've always kind of scratched my head over this, that gold bugs traditionally want safety and security, and miners and junior miners are just companies effectively with extreme volatility. So you really have to understand the miners and junior miners before entering into those transactions. Last but not least is futures. Again, it's the most cost-effective way I know of investing into precious metals. It is also one of the most sophisticated ways. So I always think of futures as kind of skipping the spot retail market and going direct. Why commodity futures? The list is long. You've got tax advantages, cost effectiveness, the ability to trade at night, tight spreads, professional robust software, standardized contracts, hedging capabilities, regulated centralized exchange, consumer protections, the NFA and CFTC. That is huge. Retail versus wholesale. I can't stress that enough. Effectively in the spot market, that's ultra retail. And when you look at the futures, it's kind of like the wholesale market. The other one is liquidity. You get licensed professional help. Probably one of the most underused aspects of my job is people using me and my licensed professional status. Live quotes in profit and loss. You're able to execute trades in literally seconds, if not milliseconds. Get live charts and indicators. Leverage available. You got hedging capabilities. Another big one, risk management tools, okay? And you have options available and just the overall sophistication. If you're a true gold bug, you're gonna learn and master the futures markets, because once you master and learn the futures markets, you will see the significant value propositions on why using futures. So when I speak of cost effectiveness, I just did this as a purely demonstration and example purposes. You know, you think that 1.5% spread is not a big deal, or that 3% spread is not a big deal in those spot storage accounts. It is a huge deal. You can see here one trade. Let's just go ahead to spot preferred, for instance, $310 per trade, okay? Versus when you go down to ProGoldTrader, you're looking at about $2. Now, it really adds up. So the spot storage accounts, kind of like a casino, they're playing the long game against the general public, okay? Based on volume, okay? So effectively, when you get to the 20 trades is really where you see the significant difference, okay? So effectively, on 20 trades, and this is just an example, 1.5% spread, you're looking at about $6,200 in transaction costs. Versus, look at this, in the futures, you're looking at about $40. And I'm doing this just to show you the absolute disparity and wealth destruction that takes place in the spot market. Now, I must say this excludes commissions, NFA, transactions, storage, exchange fees, and whatnot. This is strictly just spreads only. And in that spot preferred and the bullion deal I pulled this from, I excluded their commissions as well. But I'm just trying to demonstrate when you go from 1 to 20 trades or even 10 trades, the absolute disparity in these spot transactions. All right, so let's talk about some basics to futures. So kind of like SKU codes when you go into a supermarket, okay? And you have what we call the root symbol plus the month plus the year, okay? So in this example, GGC is the root symbol for 100 ounces. MGC is the root symbol for 10 ounces. GSI, this is for silver, GSI is 5,000 ounces. SIL, which is the micro silver, is 1,000 ounces, okay? That is the root symbol, okay? Kind of like a SKU code. And so effectively after that, you will have the month or the delivery month. So delivery months, and then we have going throughout the year, but these are just some examples. March is H, April is J, May is K, June is M, and so on. So the examples to the right of the screen, you see GGC, root symbol for 100 ounces of gold, J, April 24, the year, okay? If it was a micro gold, the 10-ounce contract, it would be MGC, J24, or MGC, K24. And if you're a true gold bug, you will master all of these root symbols, the delivery months, and the delivery year. All right, you can find the symbol list in the software, but effectively here is all the precious metals that we offer. We've got copper, we've got micro gold, which is the MGC. You've got palladium, platinum, silver, and in the exchange, the second column over to the right, you see the exchange that it's traded on. Then you see the size, the contract size, the delivery months, and then the tick value for each one. Now, I will say on all of those delivery months that you see, quite a few of letters. Those are delivery months. However, we may skip a month, and I just follow the volume. All right, so let's talk about the market specifications. So effectively, we're going to just focus on the micro gold contract, which is 10 ounces of gold. It's 10x the index value. So what does that mean? Look towards the bottom here. You see gold trading at $2,000 times 10. The value of 10 ounces of gold at 2,000 is $20,000, okay? Every tick that it moves, you'll make or lose $1. So every $10 move up or down equals you making or losing $10. All right, so let's go ahead and talk about margins. No different than what, like when you buy a house. You buy a house, you can put 20% down as your down payment. Same thing applies in the futures markets. This is good and bad. Effectively, you have access to leverage, in my opinion, too much leverage, but Again, you can structure it any way that you're comfortable with. So like the previous slide, if it's 20,000, you can put up 20,000 and not use any leverage at all and still take advantage of the cost effectiveness of the futures markets. Now, saying that, we have minimum requirements, which is the initial maintenance margin, and then day trading margins. But for this presentation, we're just going to focus on the initial. So for instance, MGC, which you can see is $968 is the minimum margin that you need in your account to control that. At 880, you will initiate a margin call. However, I don't advise putting $968 down on a 10-ounce contract. You could put down 3,000, 4,000, 5,000, 10,000, 15,000. The flexibility is in your control, okay? And these margins will change over time based on contract value and volatility. But this is just as of, what is that? As of today, effectively, these are the current margins. So what I'm trying to demonstrate here, let's say hypothetically you go fully paid, you put up $20,000, you own 10 ounces of gold, market drops $200 an ounce. You can dollar cost average and buy another contract without adding additional funds to your account. Again, you just have a lot more flexibility in the futures markets because of the margin that's offered, or the leverage, I should say, that's offered. Another big one is in the futures markets, we're open almost 24 hours a day, Monday through Friday. We open 6 p.m. Eastern on Sunday night, and effectively, we only close for 1 hour Monday through Friday between 5 p.m. and 6 p.m. Eastern Standard Time. Cannot stress how important this is, especially for those ETF traders. Market has an adverse move in the middle of the night. Those ETF accounts or those spot accounts, you are effectively locked out. You cannot trade. In the futures market, your limits and stops will be working throughout the night. All right, how to access and trade. Effectively, you can still do the traditional call your order in. I take a lot of phone orders still to this day. You can trade online. All right, so software comparisons. So if you're really, true gold bug, the phone apps and the web-based are not the best software to use. They're great for just kind of keeping an eye, or you can execute trades here and there. However, a desktop solution is still going to be offering the fastest execution speed and time. So for me on a personal level, I use both. I use the phone app and the desktop. I don't use web-based too much. Effectively, I use the desktop in combination with the phone app. I execute trades for my clients all day long on the desktop, which gives me like literally instant execution. And then I keep an eye on everyone through my phone app, but I really don't do too much trading on the phone app. But at least I can see my position, I can keep an eye on it, but the latency issues with web-based and the phone app are kind of a concern to me, why I don't trade too much. I mean, I do trade on them, but just not too often because I want the lower latency that's offered on the desktop solution. All right, now that we've got that part done, let's go ahead and get into a practice trade. I'm going to show you how easy. Every gold bug should master what I'm about to show you with the practice trade. You're going to see significant advantages, and from a regulatory perspective, exchange traded, there's just too many to name. So I really want to pull all you gold bugs out of that 60s, 70s, 80s mindset with those large spreads and teach you basically how the professionals are executing and trading precious metals these days. So let's go ahead and get started with the demo. Good afternoon, folks. Drew here with ProGoldTrader.com. If you haven't already downloaded our software, you can do that below this video in a link I will be providing where you can go and download a free, no cost or obligation demo where you will get free quotes, charts, and $50,000 of fake money to go and test your skills out with. But today's micro lesson is just going to be a quick on how to buy and sell using our software. So effectively, once you have the software downloaded, you're going to have this chart right here. You can see the $50,000 over to the right-hand side over there. And then below that, you can see the quotes. For today's purposes, we're only going to focus on the 10-ounce bar. Okay, so effectively, this is the E Micro 10-ounce bar. Right now, trading at 1974.7. We got a bid of 74.7 and an ask of 74.9, effectively about a 10 to 20 cent spread, folks. So this is where the real value proposition comes into play when trading with ProGoldTrader.com. You're not going to be wasting 20, 30, or $40 in spread charges in comparison to those trading accounts in the spot market. So huge, massive savings. But let's go and get into this for right now. So to trade this 10-ounce bar, effectively you can click this little trade mode button right here. It's going to open up this right-hand side, this buy and sell market. And effectively, if I wanted to go ahead and buy right now, the market, 10 ounces of gold, it's 2 clicks. Done, okay? So effectively, I can go to my positions tab and see I got filled. It's green coded to signify that I am long at 1974.9. And you can come to my completed order log as well and see it's completed the buy at 1974.9. So effectively, I'm long with 10 ounces. Let's just say it's 1975. So $19,750 worth of metal effectively, okay? You can put down as little as $913. Now that can change in terms of its margin requirements, but $913 is what is needed in your account today. Do I recommend that? No. Effectively, if you want to put down, say, $10,000 for that or $5,000, I would recommend doing that. But using maximum leverage comes with a maximum degree of risk, and likelihood of making money is very low. So, in saying that, the biggest thing you're taking advantage of, though, here is the ease to get in and out of the market and go back to US dollars with a 10 or 20 or 30-cent spread. Disclaimer, can these spreads vary? Absolutely, all depending on volatility, liquidity at night. So there is no guarantee, but generally speaking, you should get that 20, 30, 40-cent spread per troy ounce. Now, if I want to go back to US dollars, this is huge. No haggle, no mailing your metal in. Go back to US dollars. I just click this exit market. Boom. Back to US dollars. Okay. Now I can go back to my account summary and see I lost $4 on that transaction. And here is my US dollar holdings. This is a game changer, folks, for you guys out there trading in the spot market, taking those $20, $30 hits and really trying to preserve your wealth. Spot market really isn't an efficient or transparent market for that matter. This is an exchange traded way of trading it. Again, you've got the 10-ounce bar. You can buy as many as you want or as little. We even have the big boy, which is 100 ounces. So your cost savings with this versus the anything in the spot market is significant. So let's try that one more time. I'm going to buy the market, okay, and I'm going to go and go to my positions, and I can see average buy price 20 or 74.9. That's my average. Let's take a look here. So I got filled on that one at 74.8, 1974.8, and again I can go ahead and just click this exit market and cancel. And I'm back out. Now we do have an iPhone that goes with this, so you would have the desktop and a phone solution. So while you're on the road, you can always check your positions and trade accordingly. I can't tell you how important it is. Another factor that's important with this is trades all through the night. Okay, so if you have any working orders, limits, or stops, they will be active and working at night. Like the ETFs and the spot market, you're bound by their hours, and most generally speaking, you can't trade at night, even though it's traded on an almost 24-hour basis with us at ProGoldTrader.com. But just want to make this short, sweet, and simple. That is how you make your first trade with ProGoldTrader.com. Take care. Bye.